Welcome to Subramani. Should you invest in gold or not? Right? Good question to ask. And I don't think there is a clear answer. Gold has given pathetic returns, especially if you have been in a country with a strong currency. So, what is the return that you have got in gold over so many years? If you were in dollars, the return is very poor. However, it has given good returns for people in India because it has served as a hedge against the dollar appreciation or the rupee depreciation. So, should you invest in gold? The answer is no. But gold as a part of your portfolio can provide some stability. But it is also possible that you are not looking for stability. You are saying it doesn't really matter. Would I put 10% of my portfolio in gold, 5% of my portfolio in gold? Extremely unlikely. However, I have some funds in which I have invested, which invest in gold. Right? It's not a gold fund. Yes, I have put some money in some gold fund, but fresh money won't go into it simply because of taxation. Do I put money in gold? Yes, I buy SGB, sovereign gold bonds, but I look at sovereign gold bonds as a debt fund rather than as a gold investment, because last 4-5 years I've been getting very good returns in SGB vis-a-vis say a pure bond fund, especially going forward because of taxation. So should you buy shares of ITC? I don't know whether you should be buying shares of ITC, but I don't buy shares of ITC because I don't want to be part of a company which spreads cancer. That is the avowed aim of that company, so I won't buy. Why did I ever have ITC? Yes, of course I had ITC, and when the government, UPA government, in its amazingly stupid decisions announced that they will sell shares of Coal India, Larsen and Toubro. I'm not very sure about Larsen and Toubro. ITC, I think ONGC through ETF. I thought it was a great opportunity to get rid of all these shares. So I think Coal India and ITC were selling at 330 plus, 335, 340 kind of price, and I got rid of those shares, and I got rid of those shares for completely different reason than what I am saying. But I decided I will not buy back ITC. Enough of ITC I held, and held it for a very long time, and I had a nice quantity also. But I decided I will not hold ITC, and it has nothing to do with ITC doing well in the market, not doing well. Perfectly justified investment in terms of EPS, PE, future growth, etc. But I never liked the management, right? So I thought it was the worst allocator, like Larsen and Toubro. They would allocate to the completely wrong business. So capital allocation, they did a disastrous job, but the market, I always knew that they would pay good dividends. So it was a dividend yield story at some stage, maybe at 170, 180. Mathematically, it was very tempting, but emotionally, I decided I won't invest. When you put such restrictions on yourself, saying I will not invest in this industry or in that industry, normally your return should go down. But I got very lucky because I took all that money out of ITC and put it into Siemens, and Siemens did better than ITC for a long part. And even today, I think from the price at which I sold ITC, Siemens has done better. But that was luck. It is not, I knew this is going to happen kind of stuff. No, I just didn't want to put money in ITC, and that time I thought infrastructure was not doing well. So I thought Siemens, I was adding to Siemens. Let me also tell you that it's not as though I never had Siemens. I had Siemens, but the sale from ITC went into Siemens. Why am I saying all this? Because when you're investing, the most important thing to know is not about the markets, it's about yourself. So if gold has a huge runway and it becomes a great success, will I have regrets? I should technically have regrets because my SGB holding is not very high, and I hold some shares in Deccan Gold, and I have World Gold Fund, and I have some multi-asset funds where also there is some gold, and my wife has some gold stashed away in the bank. I have no clue about how valuable that is. So do I have gold in my portfolio? Yes. Do I think it is going to give a great performance? No. What happens if the dollar becomes 95 rupees tomorrow? Your gold value, the portfolio value of your gold will surely go up. Usage, does it make any difference? I don't think so. It is India's most successful SIP, which is gold, because 300 years back somebody in your family bought it, 100 years back somebody bought it, 50 years back somebody bought it. It is a one-way street. It just gets bought. Nobody sells gold unless they are in distress or something like that happens, or some boy who has never got married, he inherits some gold and he doesn't want it, he gets rid of it. So other than that, gold never ever gets sold. But that's not the purpose of this video. The purpose of this video is to tell you knowing where you are and how you will behave is far more important than all the financial analytics you can find in the world. You can find people who take those analytic numbers and create charts and graphs with it, which is fantastic. But the most important thing is knowing yourself. So will I have any regret when gold prices go up? No, I don't have enough quantity, so it doesn't matter. Will I have any regret if real estate goes up a lot? No, because I don't like real estate and I don't think I could make money in real estate. But many people have in the past flipped real estate and made money. I'm not in that category. So I have no regrets if real estate goes up, if gold goes up. I still hold 90% in equity, and for me it is equity which is important. So knowing how you will behave when things change, knowing what past you have, because the first 5-7 years of your life or maybe 10 years of your life decide on how you will react to panic situations. Knowing all those things is far more important than knowing the IRR of your investments, simply because by one bad reaction you can completely negate all the returns that you made over the last 5, 7, 10 years, right? So knowing how you will behave, knowing what you like, knowing what you don't like, all that is more important for your investment future. So knowing yourself, very philosophically speaking, it means if you can get out of your body and see how you behave, which is what any philosopher will tell you. If you can do that with your investing, then there is a good chance that you will become a better investor. So while you're investing, to know how your personality is, while ask yourself these questions. How will you react to a 50% fall in your portfolio? Now this is very difficult, and I completely agree that videos and literature cannot convey what the market can do. So I was in the market in 1993 where 46% fall in the index. The worst thing, we saw that fall, but the worst thing was we were brokers, and which meant in 93, 94 the phone would never ring. Nobody would ever say I want to buy this or I want to sell this. People just were not investing. Markets were too volatile, people had got hurt. Harshad, thank you Harshad. And people just vanished. People were not trading enough. So as brokers we really got hurt in 93, but that cannot be conveyed through videos, right? So ask yourself that question. If the market falls, what do you do? Do you go and defend the market? If somebody says, oh, market is full of cheats and chores and all that, do you go and defend? Then means you're getting addicted to equity. Some of us do, some of us ignore, some of us have fun when people talk like that. But the question is, how do you react to it, right? That's important. That's the question which we are asking. Are you happy with the volatility? Can you sleep peacefully at night? Because investment should help you eat well and also sleep well, which means you should know that current life is good and future is also good, right? Because of long-term investing in equities, etc. So ask yourself all those questions. Say, am I really going to stick around for a long time with these asset classes? Will I change? Will I seek advice, right? So those determine how much returns you will get. It's not that your advisor is going to improve returns, but the advisor may improve your behavior. So look at what you want, look at how you will look at things, right? How do you look at debt? Do you say, oh, debt is of no use, it's not giving me any growth? Will you look at gold and say, oh, well, when in good times gold doesn't do well? Will there be a war? We have no clue about all those things. So whether to invest in gold, whether to invest in ITC, whether to invest at all, and at what age to stop investing, all these are difficult questions to answer. But if you don't answer these questions before investing, chances are after you invest something goes wrong, and you will panic, you will cause yourself a lot of damage. That shouldn't happen. For that, knowing yourself and then investing makes more sense. Thank you.